Something's going on with gold, people. Something's going on with gold. It is Thursday, February 20th, 2025 at 8:08 in the morning. At first, I didn't even know where I was at. All right, so what day it was. All right, in gold right now, what we got going on is we got a little bit of consolidation between the new high, 2009.55, and the warning level of the day at 2009.24. It needs to hold this level today, 2009.24, in order for it to gather up enough steam to get to 2009.55. Probably go to the target of 2009.70. All right, there'll be some resistance at 2009.70. You could expect if we could break up. Let me just move this over here. Why isn't my brush working? We could get a nice little break up over here, 2009.70. We would see some resistance there for a pullback down, probably back down to the 2009.45 level before we make an attempt to get up to the main level here. This level, basically, the level that has to hold for this thing is this level right here, 2009.24-ish, right there. 2009.24 is the critical price on the day that needs to hold in order to basically show that gold is still, really aggressively bullish. Gold is, there's a lot of accumulation of it. There's a lot of central banks that have bought it. There's a lot of central banks that have sold it to rebuy it back at a cheaper price. Hence that movement down to 2000, what we have, 2008.76 level. And now we have the recovery. So we can expect that gold to basically consolidate a little bit. I wouldn't actually mind even seeing a pullback to 2009.24. Main support on the day is 2009.16. A break of that drives us back down to that 2009.13. And then the 2009.06 all-important level. Let's get on over to the SPDR. All right, so what do we got going on in this boy? All right, so got resistance at 613.99. Warning level on a day is 607. A break of 607 drives us down to 604. We need to break 613.99 in order to go for an upward target, ultimate upward target at 621. I believe that there'll be some resistance originally at maybe 618. 618 right here. There probably would be a pop back down where, you could, we get a break up over here, 618. You get like a pullback down to 613, 614, maybe even a 612 level where we are right now for another attempt up to 621.09 target. Now, that I would think is in the next couple of days. So right now I believe that this is channeling in between these two levels here, deciding exactly what it wants to do. I think Friday, tomorrow, is going to be an important day. I think we're going to be in this range for the next today, and maybe even slightly, and tomorrow is going to be, Friday's usually trend days. So Friday's going to tell us basically which way they want to take this thing and how hard they want to take it. Overall, I think it's bid, and I think that it's going higher, but, we always get consolidation. So let's go over to QQQ. Okay, right now, let's get rid of that thing. Let's go over here. Important point to hold is 529. Basically, I'm using the consolidation off of this this was consolidation area right here. Marketplace really broke out from this area. This is like a false break up before a head fake down. So this area right here is really important. Market has to hold ultimately above this area, or else it's going to drift back lower to like this low bar's close, 522. If we can get above 541 between today and tomorrow, we're probably going to trade in between the 541 and the 546. Target is 546. Ultimate target is 550. That's an ultimate target. That's going to be a monster to get above in the beginning. I'm talking about like the next, like for when it hits it, like 3 or 4 days from it. It's we're trading daily here, so it'll be like 3 or 4 days of back and forth, freaking people out that aren't in the know, that aren't watching my channel, to give them the heads up that it could potentially happen. So breakout, basically, it's got to get above 541, sustain that, and then we got a target at 546.03. Needs to hold the 534, or we drift back down to the 529. Let's go over to the ES1. All right, so where are we on this bad boy? I was making a lot of drawings here before and going over my mind scenarios of what could be, what has been, so that it won't be what it has been before, if you know who I'm talking about. Maybe I should do a Venn diagram. Oh, man. All right, so anyway, right now, as it stands, we have support at 6,138.25. The ultimate support is 6,114. All right, so that level for the next few days has to hold in order to keep up with this kind of bullish structure. We've been trading in between these 2 points. Need to get above this point. First level of resistance, 6,175, where I think that we get a turn down back into maybe 6,160 before an ultimate break up and hold above to the 6,200 level. So that's basically where I think that it's going ultimately. But right now it has to hold this 6,138. So their support, 6,138. And ultimate support within the next few days is 6,114. So the critical price we're watching for today is a break above that high of 6,166. Okay, so let's get over to NQ1. Support on this index is 22,119.75. Has to hold that level. Ultimate target, I believe, is 22,425. But what do we have to break right now? 22,000. It's got to break this 22,425 in order to show strength to get up to 22,520. So good support. 22,119. There is a lower support at 22,039. I think if you get a dip deck down into this area, it would be a good scoop to buy it, because I believe ultimately, relatively shortly we'll be up at the, the ultimate high of 22,425, which was made, I believe, in December. It's that level's been holding for a while, but that's the first critical level that needs to go to drive us to 22,520. So pay attention to that old high at 22,425. If that gets broken and it's holding above, that's definitely a bullish sign, for the day, heading towards that 22,520. So that's what I got for you guys in the indexes in gold. Please, if you like what you see, like and subscribe. Don't forget to leave some comments for me. Tell me what you think. Share my videos far and wide. Remember, always, always enjoy the party, but dance near the door. Cheers.